Hello and welcome to a quick video on gold, silver and copper in US dollar terms and their ratios. My name is Jimmy Lapping. I'm a psychologist and statistician with an interest in a wide variety of research topics including the financial markets. And in this video I take a look at the charts of these three metals, gold, silver and copper, using daily open, high, low and closing prices since the 9th of March last year until Friday's close, which was the 8th of March 2024. So here we see the auto and cross correlation functions of gold, silver and copper, with the lags on the horizontal axis being trading days and using the daily closing price of each metal as data. Without going into too much mathematical detail, what do we see? Well, first of all, the three charts on the diagonal are the autocorrelation functions of the three metals, which indicate that the autocorrelation is strongest in gold and weakest in silver, which is in line with historical tendencies because of the three metals here, the silver price tends to be more volatile. However, we see that the cross-correlation function of gold and silver is fairly symmetric, with lag zero correlation being about 0.46, which is considerably below the historical range of 0.7 to 0.9. Next, for the cross-correlation function of gold and copper, we see that the lags 0 and 1 have the highest correlations, in this case of about 0.34. Positive lags here indicate that changes in the copper price tend to precede changes in the gold price. Now, for silver and copper, we see a similar pattern around lags 0 and 1 as for gold and silver, just that now we also see the other positive lags with correlations in the 0.35 to 0.40 range, indicating that changes in the copper price tend to precede changes in the gold price. And positive correlations, by the way, indicate that the direction of change tends to be the same. Now, when instead of using daily closing price, we use the percentage of difference between the daily closing price and the daily open, we see that much of the autocorrelation disappears. This is quite normal, and it helps us to look at the correlation between subjects measured across time series from a different perspective. And in this case, the only substantial cross-correlation that remains is at lag 0 between gold and silver, now about 0.57. This indicates that intraday movements in gold and silver tend to vary in the same direction. Next, we see here on the diagonal, we see the lowest regression trajectory of each of the three metals, and off diagonal the lowest regression trajectory of each of the three ratios of metal pairs. What we see here, first of all, is a clear uptrend in gold. And we also see somewhat of a recovery in the copper price after a clear downtrend in the first half of this 1 year time window. And given that silver is flat to down, well, the gold to silver ratio has been going up most of the year in favor of gold. Now, let's have a look at each of these three metals in terms of the daily open, high, low and closing price in this 1 year time window, starting with gold. So for gold, we saw a clear support just above $1,800 per ounce about half a year ago. Then more recently we also saw support around an old resistance level close to the $2,000 per ounce area. And this week we definitely saw a breakout from the resistance area in red, giving more evidence for an uptrend, which for now can be summarized more or less like this. In other words, while not so long ago it looked like the upward movement in gold was losing some steam, we are now back in an uptrend for gold. This chart is in US dollar terms, but for example in euro terms we are now at about 64 euro per gram of gold, which is also an all-time high. Next, silver. For silver, we have seen solid support around $21 per ounce, more recently also around $22 per ounce, yet we have not yet broken out and the recent pattern of lower highs remains intact. That said, we do have a pattern of higher lows as well, so we have both lower highs and higher lows. So at some point soon we will probably see either a breakout above the red line, which would give more evidence for a renewed uptrend, or a drop below the green line, which would rather point towards a renewed downtrend. Finally, the picture for copper is not that different from silver, albeit that the price levels are different. We saw somewhat of a double bottom just below 3.6 earlier in that year, and more recently also just above 3.7. However, we have not yet broken out from the lower highs pattern, similar to silver. And hence, in combination with higher lows, we will likely soon see either a breakout above the red line, giving more evidence for a renewed uptrend, or a drop below the green line, which would indicate a renewed downtrend as the more likely scenario. Okay, that's it for this video, a bit shorter this time. I hope that it is useful. And well, for any ideas or suggestions for future videos, as always, you can leave a comment below this video or just drop an email using the email address that I've shared in the description below this video. Thank you for watching, thank you for listening, have a good day, have a good week, and see you soon.